You guys have just recently launched a new small to mid cap stock strategy.
Right.
Why and where in particular do you see opportunity? Because even though we call it small, it's actually a pretty big space.
It is, and so this is a category commonly referred to as mid cap. So you're not quite at mid cap, and you have a lot of small cap stocks. So it's the 2,000 stocks in the Russell 2000, plus the 500 next largest companies, approximately half of the mid cap index, but the smaller mid cap companies. One of the themes you and I've talked about now several times is the importance of profitability. And we're seeing that right now with rising interest rates, how important that is. The companies that are not profitable, the more speculative stocks, have not done well in the more recent period as the yield curve has steepened and interest rates have risen. But what has done well are highly profitable companies, industrials, banks, materials. That's where you want to be. That's what's in the Russell 2500. It's a highly profitable index. You have less of the unprofitable companies in the 2500 than you have, say, in the Russell 2000, which is roughly about a third. And by the way, I think the Russell is going to do well. The 2000 is going to do well as well. That's my call from now through the end of the year. I believe that the Russell is going to reassert itself. And between the 2000 and the 2500, those index should be among the best performing domestic equity benchmarks this year, if I'm right, with a steepening yield curve as the economy continues to recover.
Dan, what makes you so confident on small caps? We just showed a one-year chart of the Russell 2000, and small cap stocks have largely been flat money since basically New Year's. I mean, since December.
It's been a consolidation period after that massive rise that we saw with the launch of the two vaccines to get everybody back to work again. Now Merck's announcement of a pill you can take if you are sick to lessen and reduce the symptoms of COVID-19. Look, I think the Delta variant's running through. I think we're going to start to see, things start to resolve themselves, supply chain issues as we get further towards the end of the year. We had, I think, a growth scare more recently. That's why I think the big cap tech names over the summer really reasserted themselves, and you saw a corrective period in the Russell and some of the other companies. But I think now things are starting to turn the other way. As the yield curves have begun to steepen, I think there's two things going on there. I think it's predicting that growth's going to reaccelerate into next year. We'll have a more normalized Fed. We need some cooperation in Washington with a rational corporate and individual tax rate policy. That's certainly a question mark that's out there, but all indications are the original scope of the tax spending plan and the tax increases are going to be scaled down considerably. So I think those are all positives for the economy to continue its reopening phase.